Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Luke Tenhava. He's the founder of golddiscovery.com, a private resource investor, and someone that I've gotten to know over the last couple of years. We run into each other at conferences, and we usually are looking at things in a different way. And what I really appreciate, Luke, about the way you look at the markets is that we kind of come at things from different vantage points, but I've been following your feed over at CEO.ca for years now, and I think you have an interesting eye for finding opportunities that are maybe overlooked or opportunities with companies or in certain sectors that maybe aren't getting as much attention, and then they usually move your direction where there's more and more information and news flow that moves that way. And so I think you got a good eye for spotting opportunities before they're more apparent to everybody else. And so I always love having you on the show just to get your thoughts on how you're looking at the markets. We were talking a little bit offline just about it's nice to see the resurgence in the commodities. You're seeing everything from gold and silver and copper doing well to some of the base metals, in addition to copper, things like aluminum and zinc popping their heads up. We've seen nat gas and oil take back off. You're really seeing a lot of interest in the commodities and resource stocks, and that kind of translates over into more interest in the TSXV and some of the juniors. So just maybe let's start there with the sector having a little more interest right now. How are you reading the mining stock world? How are you reading resources after being at a lot of conventions and talking to a lot of other investors?
Yeah, thanks, Chad, for having me back again. Yeah, I was looking this morning at the TSXV chart, the 10-year chart, or going back to 2013 or 2012 when I started investing in this business. And only really for two periods, there was, I think, a great inflow of capital. 2016, the markets did well. And then again in 2020, the markets did well. And in both periods, only for 6 months, maybe in 2020 a bit longer. But other than those two periods, there was really only a lot of pain in the sector, I think. And since end of last year, the markets seem to have turned and seems to be pretty strong. Everybody was quite concerned or is quite concerned about the new tax regulations in Canada, but so far there seems to be applauding by the sector, like let's just buy juniors because it's starting to move quickly right now. And you see small juniors that are trading at 2 or 3 cents suddenly go up and double on very little volume. You see bigger companies go up 10, 20, 30%. So yeah, it seems that there's really a trend change, in my opinion. Not being a technical guy, analysis guy, but looking pretty good. And indeed, I'm looking for specific stocks. Not really. I'm not really a general market guy, like you probably are a little bit more. I'm not positioning in gold because gold is going up. I typically look for specific names.
Let's maybe pick it up there just because when you're looking at companies, you're looking for opportunities. You're looking for something that you see as a catalyst, something that you see maybe in a management team or a property or something that's maybe not being appreciated right now. And so it may not necessarily move with the rest of the herd initially because you're waiting on key news. Let's just talk about that approach to how you invest in the resource stocks.
Yeah, it's always very tempting to jump into a lot of stories because with 2,000 companies trying to create a story, there's always something of interest. Recently, I saw a company with a very interesting soil anomaly. They were looking for lithium, they found gold, and really intriguing. I actually like it, Targa, but I'm not trying to go into the Targa topic right now, but just intriguing. And yet you're tempted to really think, oh, I need to own this and jump into that small stock. But I think it's really important to think about what are the upsides to the story? What are the negatives? Is there a catalyst right now? I mean, they have a couple of issues as well. There's a lot of warrants. There still seems to be a bit of an overhang. A financing came free trading. So it doesn't mean that when you see that news, that's the perfect time to buy the stock. And sometimes you see a major company buying a company, 10% of a company, and you think, wow, if this company is buying it, maybe I should also buy it. But my experience is you really should go really deep and understand what are the incentives of this management team. Are they incentivized already? And if not, are they still going to incentivize themselves by giving themselves a lot of cheap paper? Is it too early? And if you think about it really properly, you don't make those mistakes very often. But I also sometimes fall into the trap of liking the news, something that just came in, and get a little bit too excited too quickly. So what I'm trying to do is really trying to understand, like, if the management team doesn't own 10 or 20% of the stock yet, and they only own, let's say, 10 or 20 or 30K in dollar terms, is this stock going to make them rich? Is this stock going to give them all the reasons to fight for this thing to do well and to fight for the best financing opportunity and, for the project? Sometimes you have exceptions, but what I'm looking for really is to understand, do they own enough? Do they have enough incentive to make it work? Because if they don't own enough stock yet, in most cases, stocks go up if the management team and the people around the company are incentivized. And I don't often see a company without any person owning 10% or 5% or really a good chunk of shares and still make it work for the company to really do well over a prolonged period of time. So I want to see an incentivized management, not just buying in the market. It could also be a stock that failed, but where management and friends and bigger shareholders together still own 60% and still have an incentive to get their capital back. So I want to see that. And I want to see something like, what could go completely wrong here and how likely is it? And what could be the reason for people to really get excited about the story? And I try to be really ahead of those things, but I want to already have those scenarios in place. And that's what I'm trying to do and trying to find. And the Targa example I made, I really like it, but there's a couple of things I don't like right now where I don't like it enough yet in terms of timing to buy in. And that sometimes means that I miss it. If Targa currently starts going to 20 cents, I will probably let it go and not touch it anymore. But if I see an opportunity in the coming 5, 6, 7 months, and I know a little bit what kind of work they're going to do and when those news releases will come out, there may be a point in time when I like it enough and I will buy it in the market. So it's not just the news or just the story. A lot of things need to come together for something to really work for me.
Well, let's also take a look at when you're scouting for companies. Are you most attracted initially because you're seeing something in the news that gets you to go take a look? Or is it because you're following a certain management team? Or is it because you are looking for a certain commodity exposure? Like maybe you want a particular metal of focus, and so you start looking at companies. How do you actually find and source the companies you start looking at in the first place, Luke?
Well, for long-term investments, I find them for several different reasons. But for long-term investments, I typically look for not to news releases, because I jump in on news if I want to trade something, if I think a certain news event has an immediate impact. But then, of course, that's risky again, because for the reasons I just explained, this doesn't give you the time to properly think about it. But sometimes a trade could work like that, when a Lundin family steps in and you think, okay, this is going to really change the perception of this company. Let me just buy it. And I did that with Montage, for example, and with Fireweed recently. Highlander Silver I saw with Work and the Lundins, but I didn't buy it, unfortunately. But the longer term ones, sometimes I find them by simply screening for all the stocks that trade below $20 million, that have still cash in the bank, enough cash that doesn't give them a real financing overhang where people know they're going to finance and nobody's going to buy it in the market, where the insiders already own maybe in total 20 or 30% or 50%, but the individual, for example, the CEO owns 10%, the second person owns 5%, and the third person owns 4%. You know that 20% together really has an incentive. Like if they do well, they will also get rich, like alongside the shareholders. And then I look for the project, of course, like, is this something that they can sell? Is this a story? Because if it's not a story, then it can only go up if they come up with a surprise. So it needs to be something that's intriguing and it gets people excited about it. And people don't have to be excited right now, but I need to have a sort of an outlook that whenever they can go back and promote the story, or whenever they can go back and really start working on the project, people will own it again, will jump in again. And Sun Peak is an example. They had to stop work because of a civil war. And in 2022 or 2023, I had no idea how long it was going to take, but my guess was that it was going to end at some point, and they had a lot of cash in the bank, and these guys have made discoveries before. They have no warrants outstanding, so no overhang from that point of view. So you don't know yet when the thing is going to turn and what the bottom is going to be. But I was pretty sure this company was not going to trade at a discount to cash because of the highly skilled team and also their ability to find other projects should things completely go wrong in Ethiopia. And that worked really well. But of course, I was willing to also buy lower as it was going lower. I started buying at 22 cents. I was still buying at 14 cents. So you have to be able and capable also emotionally to see your initial purchase at 22 cents go to 14 cents. But that takes a bit of conviction, I guess. So I look in different ways, but typically I want to see a level of insider ownership or insider buying, and preferably a bit of cash in the bank so that there's no immediate financing coming, and ideally already a good project or people that have the capability to find good projects. And then you call the company and get comfortable. And after a number of weeks, you start to get a level of confidence where you can start buying it, not too quickly, preferably. And that's often how I try to do it.
All right, there's a couple things out of there that I'd like to pull on that string. Let me just start with one of them. You're looking at the inside ownership. You're looking at how serious they are, how aligned with investors they actually are based on how the stock does as far as performance and how they'll do because of the amount of attention they put on it in their own portfolio. You mentioned you call the company there. Do you start with looking online at SETI filings? Do you look at the corporate presentation to try to find out where the warrants are priced? You call the company and try to find out, because a lot of times investors get excited about a particular news story, or maybe they get excited about a project. And what really hurts the stock and what hurts them as an investor is not looking at maybe the financial overhang from the warrants, or not looking at, those key things. So how do you do your due diligence to find out where everything is priced as far as the management's shares and as far as warrants?
Yeah, warrants, most people find it maybe boring, or I repeat it I talk about it a lot and maybe too much, but for me, it's top three reason not to buy things. So maybe number one, if I see a stock trading at 15 cents, for example, with 50 million shares out, but also another 30 million or 40 million warrants at 20 cents, it almost never happens that stock is going over 20 cents unless they have a major discovery or something that completely comes out of the blue and everybody is happily surprised. And even in that case, those warrants will keep the stock down for a while because there's always some people selling the stock and keeping the warrants. That's just a phenomenon that happens. And the best example, I think, is Hercules Silver. It took 20 or 30 million dollars, I think it was 30 million dollars for the stock to just double. And in October last year, and maybe still, people were thinking that this is potentially the next big copper porphyry discovery in the US. And that was the big thesis, and the big players were coming in. Even Barrick was buying in the market. And even then, it takes like a number of days or a number of weeks and 30 or 40 million dollars of buying to double the stock. And then subsequently, it took another 20 million to triple the stock. I wonder if this stock would have ever been able to get well above the warrant price if they didn't have that major discovery. So if you are betting on a company making a major discovery and you're buying one of the 3,000 companies in Canada, then your chance is really, really small. And I prefer also to position myself that if they don't make that world-class discovery, but they still have some positive news, and that could even be the Targa example I gave, like a gold soil anomaly that looks amazing but has no drilling yet. I mean, it's ideal if a stock can go up, not just because it's fun or you can make a profit, but also for the company itself to finance at higher levels. Otherwise, the stock will always remain under that, for example, 20 cents level. And the stock will be also, they have to finance below that level because that's just the way they cannot get any further than that. So it's not just because it's fun or good for their portfolio to see the stock go up, also for their own ability to finance and avoid, maximum dilution, that it's important that the stock goes up on a soil anomaly or a trenching program. And with those warrants, it's often very difficult. I've seen a couple of examples recently that were a little bit of an exception. I'm surprised by Power Nickel, for example. They have quite a bit of warrants out, and it did quite well on the discovery they made, better than I expected. And that's why I didn't buy it. I was considering to buy it, but didn't because of the warrants. And that's one that I missed. But in most cases, it saved me, I think. And that's why I try to focus on warrants, focus on incentives. And incentives is really people inside owning a lot of stock as well, alongside you. I'm okay with them owning cheap stock. I'm not completely put off if somebody owns cheaper stock than me inside the company. But it depends, of course, how extreme it is. I prefer them not to own a tenth of a cent and never buying in the market just that cheap stock that they got on day one. Ideally, they also buy in the market. But it's a complete package of warrants, insider ownership, buying in the market, and then, of course, having a good project or something that at least it's a good story and has potential. And it's a number of things together. But those warrants and those insider ownership is, for me, crucial. Otherwise, it's very difficult to see the insiders working for you.
Yeah, it's such a good point. And there are companies that we've come across where the person has those 1/10 of 1 penny founder shares, and that's all they've ever had. And it's like, well, okay, well, what's your real incentive to keep buying into financings and to partner with people? And when you don't see that, you can kind of tell that they're not aligned with the investors. So very important points there. Same thing with getting in a stock that maybe has exciting news, but they're getting capped at where the warrants are because you didn't think about that before you invested, and then your thesis doesn't play out because it gets truncated right there at the warrant price. Well, another thing you brought up was with Montage Gold, seeing a strategic investor come in like the Lundin family. There's other companies that maybe have a major come in as their strategic, or maybe they have another activist investor that comes in, somebody like a Dave Lotan or a Michael Gentili, or someone that comes in and really underpins the value of the stock because they take an activist stake. Does that help you vet out which companies to look for, or are you more likely to go into a stock where they haven't got one yet and you're hoping they attract a strategic investment?
Yeah, I'm not buying the developers a lot because I don't feel that I have an edge against other people evaluating those projects and going into the data room and checking it all out. So I followed Montage for a long time, but never felt a level of conviction or knowledge that that allowed me to buy the stock myself. But then, and Lundin was already a shareholder, the Lundin family. But when they really bought, I mean, they took a bigger ownership stake in February, end of February, and it was obvious that they brought in their own team, and it became a sort of Lundin branded company. And it was sort of the kickoff, like, hey, we are going to bring this project into production. This triggered me to buy the stock immediately in the market because I felt it was a really easy opportunity. If they decide this is something we are going to build, we are going to bring our team in, we're going to bring more money in, and we will likely arrange a financing package soon and permit this project. At that point, I felt that $150 million was very cheap because they had 4 or 5 million ounces. And I think suddenly you don't have to look at all those different tables comparing, companies themselves, comparing them to other projects, because they will always show themselves in a way that they will look really nice compared to other companies. But this company has like 4 or 5 million ounces. And I think when the Lundins jump in with this capital and with this conviction, then those 4 million ounces are currently a different 4 million ounces. I know a company that has 3 or 4 million ounces that only trades at $10 million. And it doesn't mean anything, in my opinion, because you need a level of certainty that this company is going to make it and not just bring it in production without making money. These people the Lundins are heavily inside this company. They have a big incentive, and they have also a lot to lose. So if they jump in, then I think a lot of risks will suddenly disappear. And that's why I bought it. And I felt they will at least trade at 400 or 500 million. If you look at the Ruperts of this world, like Rupert is 800 million, Newfound Gold is 800 million. If you look at those like 3 or 4 million ounce projects, why would a project like this with a good feasibility study trade 50 or 60% below those companies? So I have pretty simple ways of looking at these things the moment that these type of investors come in and really say, we are going to build this. So this was, for me, a very easy trade. I didn't see much downside anymore the moment they came in February.
Well, you brought up Rupert there in that answer, so I got to circle back around to a discussion we had last time where Orion Resources had a right of first refusal. They were partnered with B2 Gold on a 30/70 JV, and their land is adjacent to Rupert in Finland, and their Helmi project. And so they were looking at what they should do. Since then, since we've talked, the news has come out that Orion has decided not to act on their right of first refusal due to dilution concerns if they were to try to pursue that. And so B2 Gold stake has been sold to Rupert. So now it's really Rupert and Orion there. And then obviously Agnico Eagle is involved with both Rupert and now with Firefox. So how are you looking at that whole area of Finland? How are things coming together? What options does Orion have? How do you speculate it may play out as far as all of this being consolidated?
Yeah, and I think you just said that B2Gold 70% is sold to Rupert, but that's not the case yet. When Orion press released this just after PDAC, I think, the rover was triggered and they had 60 days left to decide on this rover. This is when also Rupert confirmed the deal they have with B2Gold. But that's not a closed deal yet. And recently I was reading a report from Red Cloud saying that if Rupert owns 70%, it doesn't give them the right to just build their mine on Orion's joint venture ground, basically. So it's interesting. Is B2Gold or is Rupert buying this ground from B2Gold just to own 70% of the extension, or do they buy it because they want a layback, because they want to, be free in designing their open pit also across the border? And Red Cloud was suggesting that 70% ownership is not enough to just design their open pit in whatever shape or form they want. They still need a deal with Orion to do that. So that deal is not closed yet. And I was expecting some kind of deal before the Roper date initially, because I think Rupert has an incentive also to make a deal with Orion, but that didn't happen. So it's still in play. Orion has no right anymore to buy the 70%. So now it's up to Rupert to see what they are going to do. Are they going to close it? Are they going to make a deal with Orion? Is another party going to come in? It's a very interesting play where Agnico Eagle has a certain role because they are a big shareholder of Rupert, and Kinross is a shareholder of Orion. B2Gold is still, the deal's not closed yet. And I think B2Gold said in their conference call recently that they expect it to close soon. So very, very interesting. I still believe, and I've said that for many years, that this mine will not get built until something gets solved in this area in terms of consolidation. And so far, I don't think this is the thing yet. I think more will happen. Whether that is very short term or maybe later this year or next year, I don't know. But I'm fairly convinced that this ownership structure is going to change over time. Because if Agnico Eagle is going to pay $1 billion plus for Rupert and Ickery, then this situation needs to be cleared, I think. But that's just my 2 cents.
All right, Luke, appreciate you breaking down what's going on in Finland there. And yeah, there's still some options on the table for both companies to see how this all plays out. But it's a fascinating story to keep following along with. I know that you have a whole stable of explorers that you're always filtering through. Is there any other company, one or two companies that you'd like to highlight that have your attention now that you think aren't really getting the attention of the market, but you see something interesting happening?
Yeah, I briefly mentioned it already in the interview, which is Sunpeak, and I gave a couple of reasons why I bought it in the bad days. But it only went up, like it only doubled since Ethiopia became open to business again. So it didn't even run that much. And it is a typical example of something I like with this. And I don't want to go too far into the warrants again, but there's no warrants and all these reasons. There's nothing that really caps the stock. People who are in it are typically in it for 4 years already because there was a war in Ethiopia. And they are drilling, in my opinion, some amazing targets. I really, really like it because sometimes you have companies that have just one project or one target. You see it often in nickel companies because there's just one big red blob on the map and they drill it. And if they don't hit immediately, the market doesn't believe it anymore and everybody sells. But Sunpeak has like 10 or 12 targets and they're developing more as we speak, where they have an outcropping gossan. I mean, Ethiopia, I don't think you can find big VMS targets like this in Canada anymore. Maybe one day, but typically it's very difficult. And here they have outcropping gossan everywhere. They have really big gravity anomalies that also align with big VTEM anomalies, two different technologies that say the same thing. Hey, there's something below here. And then they do, soil sampling and they find copper and zinc in the soils right on top of those VTEM anomalies and right on top of the gravity anomalies. And this is on trend with deposits that the same team found in Eritrea, just across the border in Ethiopia now. And if they drill one of those targets and it's not immediately a big discovery, then they have 9 left. So that's what I like. If they come out with a press release drilling one target and it's okay, I think they will find some copper and zinc everywhere because it's pretty amazing, but you don't have to have an immediate big discovery. I mean, you need to have high grades and it needs to be impressive in a high-risk country like Ethiopia. But I wouldn't be worried if the first one would not be the big one or the second one is not the big one. Of course, if you get to number 8 or 9 or 10 and there's nothing left, then you get a bit worried. But that's quite a bit of time from now. So that's a company I'm really comfortable with. If they miss one time, I think most shareholders that have been waiting for 4 years know that it's not immediately over. The story is still completely intact. And these people owning the people running the company own like 20 or 30%, and their partners own another 20 or 30%, the Pathway Group. So really impressive in my opinion. So that's just an example that I really like.
Well, that brings up an interesting point. Well, one about jurisdiction and how you discount jurisdiction being in Ethiopia and coming out of a situation where they had literally had to shut down for a couple of years. But the main question that comes out of that is when you think about a company that has multiple projects, and so they have multiple chances to make a discovery, and then if not, move on to the next project versus a company that only has one single project. Do you ever feel that a company that has multiple projects sometimes is a bit scattered, and if they basically go through really quickly and say, "Oh, we didn't find something on the very first pass," they move on sometimes too quickly because they have so many projects. So the temptation is to keep moving rather than say, "Hey, what did we get wrong? Why don't we go back and see if there's still something there we missed?" How do you look at that? A single project company versus a company that has so many projects, maybe they have too many projects.
Yeah, agreed. But I would consider this one project. It's all in the same sort of 40-kilometer radius. They just have a very big land package. So I don't think this is a company that has, a project in. Well, I know that there's another company that has projects in Nunavut and in Arizona and one in Europe and one in Africa. This is a company that's very focused on Ethiopia right now, and they have been doing a lot of work to look for other projects in those 2-3 years. So I think they have the ability to find something new if Ethiopia would warrant that. But in the meantime, right now they have one big project, and another one is Lavras Gold. They have a very big project in Brazil, made a discovery or several discoveries, but just one that was really picked up by the market and the stock started going up. But also a big land package with these big, maybe somewhat lower grade intercepts, like 200 meters or 300 meters of 1 grams. But also some target areas where they have 40 grams over 4 meters. So lots and lots of work to do, and not even possible to do within 1 or 2 years. So very focused on one country, one area, but still a big project so that they have several targets. And sometimes you have these one target companies that have a fairly small project and they have one nice IP anomaly and maybe one nice other survey, like a soil anomaly, or they have just one story, like a 500 by 500 meter area that looks really amazing. And sometimes I also get interested in those things because they present it and you think, wow, everything lights up, and they find it on surface. That's just one very nice spot to drill. But those companies also drill and often fail, hitting something of interest. And then if that's the only thing they have, no other projects or not a big land package with several targets, then it's almost like story over for that moment, and everybody sells out. And I just try to avoid having a very big position in those companies because everything depends on that 500 meters by 500 meters. And if that's not working out within a couple of months, everybody leaves, and you are left with a sold off stock, and they have to finance at 1 or 2 cents again. So, and that's just the thing I try to avoid. Avoid losing money first, and then focus on making the money.
Well, just maybe one more here on this same topic is when a company has gone into a single project, maybe they have 1 or 2 surveys, as you mentioned, they go out and they drill it and nothing happens. Not that they necessarily hit dusters, but they just hit holes that don't excite the market. Do you want to see a management team that says, "Hey, we're going back to the drawing board and we're going to give it one more try and here's why"? Or do you want to see a company say, "You know what? This project didn't work out. We're going to go find another project," because there are a lot of companies. There's probably several hundred companies right now that know full well that what they've done so far as their work, they didn't hit what they were looking for. Yet they're continuing to raise money to keep their salaries, to keep the dream alive for their own paycheck. And so they're perpetually becoming a lifestyle company. How do you avoid those? What do you want to see management teams do when it is a tough decision to move on or cut bait and run? How do you look at that side of the business, Luke?
Yeah, and I think you get comfort by talking to the management team very often, and you will find out, especially if you follow a company for months or years, what type of company, what type of people are behind it. And if these people explain to you that it really requires another shot, and you trust them because you have been talking to them for so many years or so many months, you have to give them a level of trust and say, okay, of course, I'm not the major shareholder that will ultimately decide. I mean, but still, I try to, I could be sometimes 0.5% shareholder, or sometimes 0.25%, and sometimes 2 or 3%. So I'm not the Eric Sprott that needs to be convinced by the team, but I'm still trying to treat it like a very important investment of me. And I'm talking to the management team. And if they can explain me good reasons why they want to go back, I'm happy to wait. And of course, I would challenge them like, hey, but this is the only shot you have left. Wouldn't it make sense to perhaps look for new opportunities in the meantime, so that if it fails, there's a new alternative? So, of course, you need to be comfortable with the people making the decision. Otherwise, if you sometimes I buy companies where I feel it's a bit of a promote. It has a chance, but it's really the biggest factor of the thing going up is because it's so well promoted. You need to take some money off the table. These things typically end. And you also find companies like Azimut is a good example. They have been around for so long, and they have been trying to protect shareholder value, which is not a guarantee you will make money with them, but it's a guarantee they will not do stupid things that are not thought about properly. Everything they do is well thought about, and then you still need a bit of luck. And they are very skilled as well in Quebec. So they are always focused on Quebec. They are pure explorers. They are very careful with their money and not just spending it on bad things. And then you need a bit of luck of them making a discovery, or perhaps doing a good deal, a joint venture deal, or royalty deal that a couple of years later becomes something valuable. And then you get comfortable with the people, and they will make sure that the company is not treated in the wrong way, or the shareholders are not treated in the wrong way by just sitting in expensive hotels and restaurants.
Yeah, such a good point, Luke. Well, and it sounds like you make sure when you're getting into a position that you do talk to the companies, that you do talk to the management teams, that you do understand the thinking behind their thesis, and like the science behind it is one thing, but you want to find out the temperament of the management team to make good deals and have the shareholders back because they really believe they're onto something, or they're candid and transparent enough to say, okay, it's time to move on to a new project. So lots of good thoughts there for investors to consider before they pull the trigger on their next stock purchase. And it's always a great idea to get in touch with management teams. Luke, I want to give you 1 minute to also discuss your platform, Gold Discovery, because it's another tool investors can use to filter through all the information, to do search parameters that are tailored to the kind of stocks they want to find. Maybe speak to us really briefly about Gold Discovery and what it does for investors' due diligence.
Yeah, we recently renewed the golddiscovery.com site. It looks a little bit more like an app right now, and we also have a mobile app which provides you with the news, but not just the news. It provides you in real-time drill results, because I think drill results is one of the key things that can drive a stock, or also can make a stock go down. So the platform is built around the idea, what can really make a stock run or really hit something badly? And drill results typically impact a stock up or down. And other things like strategic investments impact a stock up or down. If you have, a big name coming in, a Lundin family or Richard Warwick, we have a system right now, and we will incorporate that soon into the site. We currently host it on Twitter as well, where we send an immediate message when somebody is mentioned in a press release buying stock. So it's not a CDI message, not an insider filing, which often comes a number of days later. It is a press release where the press release says McEwen is buying 10% of the stock, or Warwick is buying 10% of the stock. And sometimes those messages are at the end of the news release. So investors don't always notice these things. So we have, a bit of a program running behind it that in real time reviews every private placement news release and sends out a real-time alert when an insider or a strategic investor is mentioned in a private placement news release, so that you can immediately react to it. Like I did with Montage Gold, which doubled in 2 months' time when the Lundins came in. And so your phone will immediately send you a push notification like, hey, here's a strategic investor buying a placement. And sometimes those type of alerts can help you. And on top of that, we are building also a new platform, a second platform next to Gold Discovery, which I will not talk about too much yet because it's almost ready, but not there yet. And maybe another time, in our next talk, we can talk about that one a little bit. Probably in a number of weeks, we can launch that one, and it has a number of other interesting features.
All right. Well, I encourage people to go check out golddiscovery.com, either in the app form or just go to the website, because there is a wealth of tools there that investors can use to tailor through not just the drill results and not just key strategic investors, but you can really shape a lot of the data to your particular filters and interests. So it's a great site that your team has developed, Luke, and appreciate you sharing that with us. And yes, keep us posted on the next project you're working on. We'll get you back on and we'll unpack that for investors. If people want to follow along with golddiscovery.com, I'll put a link to that down below. And if people want to follow along with Luc ten Have, you can also go to ceo.ca. I'll put a link to that underneath this interview. He's always offering interesting insights and things that he's looking at in the marketplace. And it's just great to have you on the KE Report, Luke. Looking forward to our next conversation.
Thanks, Chad. See you next time.